You guys there? Anybody see me? Alright, there we go. Am I good now? Am I good? I think I'm good. It's so weird. Why am I getting, like, hit like this? No, it's not my computer, it's YouTube. That's the thing. It's not even, like, it's not even my computer. It's gotta be YouTube. Because it's only doing it because I'm... You see this? As soon as I started to talk about TRKA and GNS, it started to do it. And then, now that I'm talking about FRC heavy, it's doing it again. So, unless... I don't know. Unless we believe in like, coincidences, that's kind of effed up. FRC. But that time it actually, like, clipped it completely. That was so weird. I've never had them close my stream on me automatically. FRC. Yeah. I just think it's very, very coincidental that it happens as soon as I start talking about GNS, TRKA, and now FRC. Bitcoin's RSI is at 45. That could be it too. Mullen up. MMTLP V2 with the GT. Wait, what are you talking about? Sean, can you call and explain that? Because I have no idea what you're talking about. We froze at the 48 on FRC. Still trying to gather info. Okay, please. Please and thank you. Everybody thank Sean. He's doing some DD for us. GTII divvies that are being delivered are being delivered as contra CUSIPs instead of a true dividend. Interesting. What's up, Scott? FRC, 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 FRC. Moving on Bitcoin today. Right now it looks like it's trying to double bottom off of a prior support line. But at 2 o'clock, the FOMC statement comes out, and it really won't matter what we think. Like, the charts are just going to move rapidly all over the place. It'll be big money in control at 2 o'clock, like 2:30. Two o'clock is when it starts. Yeah, that's when the FOMC statement is released, and then at 2:30, Powell comes on to do a press conference. Mullen's volume is at 227. Average 502. Yeah, he comes on and tells about his big old toolbox that he doesn't know how to use, apparently. GNS back 20%. TRKA down in the 200. That's just eating supply. You can see the ask bid spread. Just eating supply, not worried. Heads up on FRC though. I'm telling you guys that this could go galactic. Just don't be the last one holding it, obviously. Not financial advice, yada 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 yada. You guys get it. One day you're gonna send me a super chat for you to talk about MOS. Put your money where your mouth is. Send me a super chat. FRC's RSI is at a 52. TRKA back to the 200. All the EMAs still collapse on Bitcoin. A little bit of a pop to a prior resistance line. Key level. Bitcoin. Let's get over that key level and hold, please. By the way, that looks like a big old cup on Mullen, doesn't it? Over 105 million traded on FRCB today. Bitcoin trying that higher level. Coinbase still sub 50. Heads up. She might just go galactic. AMC to 570. GNS has 20% out. FRC. FRC. Bitcoin towards the 200. We have the gold cross on Mullen here as well. Why am I charting FRC again, guys? Like, I don't mean to like come off as like a D-bag, but it just like there's a reason for what I'm doing. Like, it might seem small, but like when we're talking about a low amount of, you know, like a low dollar figure, the percentage change is very, very like quick. I see that money printer and everybody else who was talking smack left. Go ahead, TRKA. It's your turn. Because I'm on commission? Yeah, I wish I was. Wish I was. VIX to an 18.25. Mullen on top of all the EMAs. Well, actually at all of the EMAs. She's down to about 4.44 up. Heads up on FRC, guys. 107 million traded, and the RSI is now 70. 67.
Oil prices extend losses. U.S. crude falls 5% to a session low of $68.06 a barrel.
Buzz, what do you think of the Atkins-ICANN beef? I have no idea. I didn't even know that there was any kind of beef. IMPP down again today. Can it go lower? I'm not a fan of IMPP. I don't... Like, I've never been a fan of IMPP. So I don't know. It's not something I follow. FRC, I think, is going to go ballistic. I have a very, very strong inclination that it is going to go wild. Hey, Mom. Yeah, volume on TRKA is 6.8 mil. Average 19.15. Mullen volume currently 237. Average 502. Yeah, FRC, baby. Let's go. A break and hold of VWAP is huge. No news yet, Scott, that I'm aware of regarding that. Bitcoin trying back towards the 200. RSI on Bitcoin's at 62. Mullen's volume's at 237. RSI's at 45. It is on top of the MACD, but it could definitely use a swing up. FRC gets a push in the overall market, and I bet you it goes. I wouldn't say that, Scott. Bitcoin to the 2. Trying to form a cup here on Mullen, it looks like. Scott, remember that they hired Jeffries, though. That's what I would be thinking about when it comes to TRKA. Like, they hired Jeffries. I'm not sweating. I mean, you trade you. Like do your own thing, but that's how I feel. FRC to VWAP again. Mullen trying off VWAP and the 200, looks like. TRKA almost slid down to VWAP. Only thing is yeah. So, well, there's more than just that, but that's, another good reason. Thanks for pointing that out. FRC heads up. FRC. FRCB. What are you doing above VWAP? GNS looks bullish, yeah. Down to VWAP on TRKA. FRC trying above VWAP. FRC. TRKA. I doubt that that candle will last, but Hub C up 11%. Congrats if you hopped in that when it was mentioned earlier. GNS at 26%. Hell yeah. Let me know if Mullen does anything crazy. In the meanwhile, I'll watch GNS. FRC, what are you doing? $112.5 million in volume right now. Bitcoin to the VWAP or to the 200, excuse me. FRC. Bitcoin through the 200. Remember, Powell comes on at 2:30, and the statement is at 2. Also, please don't forget to drop me a like and a sub. It's free, guys. I don't want your money. I want Google's money. I appreciate it. I think it's got a far way to go yet. Well, what do I know? What the hell do I know? Super trend down on GNS. FRC up.
Russia's Novavax says the fall in oil prices requires detailed study for possible OPEC plus reason.
Or become a member to show appreciation for an all-day market stream each day. Rare to find online nowadays. Thank you, thank you, Doc. Thank you, Doc. And also the what's it called? The V2 tier also includes like a group messenger. Waiting on the break of Bitcoin. I can't wait till the end of this to like look and see where everybody was like talking smack about me charting this, and like look and see how far it goes. And it just from a fun, it just like a technical trade. It's not even.
Novavax says maybe the oil price
nothing
will
else.
be short term.
Like it's a technical trade, and that like. That's
It
all
says
that's
the
it.
OPEC Plus monitors oil price drop, and it may be temporary.
GNS about 119. Bitcoin above the 200. Drop in oil prices may be temporary. Wonder why? Cough, cough. Summer vacations. Ugh. RSI and Bitcoin's at 62. Well above the MACD. Just try to get over on top of this 200. FRC's volume is currently at 117 mil. Obviously, there's no average because today's the first day it's trading OTC. BBBYQ. No? I don't know. I don't think I could answer your question. It does look like it wants to spin up, though, again. 13's trying to come through. 48 didn't come through the 200, but... yeah. Well, no, well, it's OTC now, so it'd be BBBBYQ. It might just be reading wrong on your what's called on your UI. Correct. Just watch this, guys. Like, SIVBQ went from a penny to 97 cents in one day. FRC has gone from, like, what? Where is it low? It's gone from 24 cents to 38. Plenty of room left to go. If it wants it. Bitcoin trying to eat supply up towards the 200 again. We have to be paying attention to volume here as well. So hard down, 118 in volume. That's gonna get sucked right up. Watch. RSI and Bitcoin's at 53. GNS through resistance. GNS now at 30% up. Love it. Eclipsing average volume as we speak. Remember, guys, I have a space call with them tonight. My handle's at BuzzMarginCall. Bitcoin's RSI is 54. Nice little wick right there. Some uncertainty. Tried to the high side, got rejected off to 200. Keep going up. GNS up 33. It's up on FRC. Well, FRCB. TRKA just wants to play grab, you know, behind with like 19.5 cents. AMC to 4% up almost. You know what? I know exactly what I'm gonna do. Hold on a second. Shit. Yo, guys, you guys know I'm not a financial advisor. Real quick, we're gonna look at FRCB, which just started trading OTC. My original average, I bought it after it sold off before it got suspended. My average was 187, right? So when this went OTC, right, you could see the risk reward zones as it was spinning, right? And now it's above VWAP. I mean, I'm not going to record all day. I am streaming all day, but I'm not going to record all day. It is above VWAP, so obviously it's turning in my favor. But the reason why I'm even charting this, because people were just like kind of like, I don't know, being rude as to why I was even charting this, is because of this right here. So the day that SVB went went OTC. They got all the way down to a penny. And by the next day, they hit 129. It looks like. So, you guys do you, but that's how you could play some of these reversals. Obviously not financial advice. Best of luck. Alright, now I'm done doing that. I swear. Okay. FRCB. Morning, boys. Let's trade. Give me some tickets for Casa Borrow for TD America. Ooh. Tickers. Give me 1 second. Let me think about that. Octo. MCOM. CXAI. GNS. FRC is about to move up, it looks like, guys. Do Hub C, please. HUBC. Mullen. Let's do Mullens. And then GNSs, I guess. HYMC. Nice trend upwards. Octo, MCOM, CXAI, GNS, Hub C, Mullen. Yeah, there was one more and I forget it though, I think. No, I think that's it. Oh, and TRKA, if you don't mind. FRC, just as I expected. Hey Jordan, I don't want to bust your balls, but are you there? So I can have just a conversation with you. I just want to make sure you're listening. Bitcoin. Yeah, TRK is under view up. Don't like it. Yeah, I just want to make sure I shut that recording off. Bitcoin might be in a pennant too. Let me draw it out. Bitcoin's got to break the pennant to the upside to take out the 200. Up to the 200 right now, back in the pennant. TRKA. Wait, you thought what froze? FRC. Oh, word. No. GNS 28% up. Nice. Cruising.
Russia's Medvedev says the drone attack leaves Russia no option except the elimination of Zelensky and his quote-unquote clique. Again, Russia's Medvedev says the drone attack leaves Russia no option except the elimination of Zelensky and his clique.
Oh boy. That sounds promising. Bitcoin to the 48 in support. VRM is still under 80 cents. Heads up on FRC, guys. At 122.3 in volume. Ratchet, what up? How did they get a drone? I don't know how. I don't even know how close it was to the Kremlin. Double bottom on Bitcoin off the 48. Right above it. Oh, wow. So, like, now they're just, like, poking the bear, basically. Like, they're... I feel like I just feel like they're making it, like, worse for themselves and us. Or am I just off base? Mullen trying to break key level right now. Cost to borrow today. MCOM is 27.5. CXAI cost to borrow is 615. GNS is 76.75. Hub C is 200. Mullen is 1.5. Not available on TRKA. HKD not available. Thank you. Mullen up. I guess so, but when backed into a corner, you expect it to lash out. You should have never had them denuclearize in the first place. Yeah. I'm very, very outspoken about my opinions. And we're not gonna change each other's minds, so it's just not even it's not even worth talking about. Let's talk about money making rather than the politics. Mullen, big old cup. $123 traded on FRC at the moment. Now you could do. Now can you do a full TA on HKD? Yeah, we could do that. First of all, I like your risk reward on a 4-hour. You're sitting on support right now. Mullen's trying to handle right now. I'm just trying to do this for Sid quick. Sid, I like your risk reward personally, but again, that's a China play, and I don't play China. You feel? Is that fair enough? Oh, you wanted Ortex for it too. Hold on. Okay, we're gonna do Ortex super quick for him. What the fuck? Come on. I'll check it in a minute. Mullen trying. Mullen up. Bitcoin up. Sid. 12% short. Bitcoin. Go ahead, baby. Push for us. Thanks, man. A lot of movement. I feel to the upside. Too bullish. I think it can move to the upside as well. And that's just my personal opinion. I'm not giving financial advice or anything. It looks like it's in a position where it could move, and I think it's very, very odd that the Chinese stocks ripped then dipped yesterday. Just have nothing to show for it realistically. So that's why I'm thinking HKD might be like a half decent look. TRKA isn't a bull flag. Mullen. She's up 8. Our girl GNS is up 26%. Let's go. Bitcoin up. Bitcoin up again. Bitcoin vertical on some blue pill type shit. Remember, guys, Powell talks today. Powell talks today. Let me go ahead and see if I could pull it up here. Jerome.
Just an early heads up, we do get the FOMC rate decision today, of course, at 2 p.m. Eastern Time. However, starting an hour before this, at 1 p.m. Eastern Time, our very own Tony is going to be running a live stream going over the fundamental prep ahead of this release. So the live video to tune into this is available on the feed. Feel free to share it with your fellow traders as well.
Give me 1 second. I'm still fucking with that title. But if you look at the option chains for Zion, MTB, and CMA, banks with most
According
exposure
to
real
Nick
estate, you
Guy,
can see
the
the
G7
opportunity
ways
to
of
choose.
communicate urging China
Commercial
to
real
be
estate bubble could
responsible.
burst soon. Oh boy. That becomes a problem if commercial real estate starts to bust. There's a bull flag in here on FRC. Guys, heads up on FRC. I gotta let the dog out. 1 second. On trend line for TRKA. Mullen is trying to figure it out. Bitcoin back towards VWAP.
Some more colour from the Nick Eyes. The G7 are to warn China against using force to alter the status quo.
Do you understand why I'm charting this now, Jordan? NYCB is the regional bank with the most commercial real estate exposure, 71% of its balance book. Damn. It's a high percentage. Because it's at 37 cents. And we had it targeted at 30 cents. So think of the percentage change. Well, yeah, well, you're giving me attitude when I'm just trying to, like, I'm trying to make a point to you so you understand for the future. Alright. That's fine. If you don't care, that's fine. Like, that's fine. I'm just literally trying to explain something to you. So then, like, maybe it could help you out in the future, but so be it. Yeah, but this is a different situation. And that's fine, but, like, just don't criticize me about what I'm charting just because you don't understand why I'm charting it. Okay. He mentioned it was him and that other guy. They both kind of said it like simultaneously. I literally didn't say nothing. You're still going on about what we were talking about. Oh, okay. Then maybe it was the other guy. Maybe I misunderstood. I just wanted to make sure that like you understood why I was being like charted. Because at first it didn't seem like you did understand. Thank you, Bodhi. Thank you, Bodhi. It actually did more than 200%, I believe, from looking back. Thank you, though, Bodhi. Well, it already did bounce. I'm already, like... Say I X the trade right now, it would be a dub. It'd be a big dub, actually. So, like, I don't know. I'm showing a different, like, strategy on how to make, like, how to salvage a play, basically. It did a couple times, actually. Yeah, bro, like, the first day SIVB went down, Bodhi, it went down, like, to, like, a penny. And then the next day, it ran up to, like, $1.26.
As the U.S. Senate Majority Leader Schumer says that Democrats hope to introduce a bipartisan bill to compete with China in the next several months.
Yeah, that was crazy. Yeah, and everybody was in here saying, "Oh, well, you're not in SIVB. Oh, you're not in SIVB. Can you pull up SIVB?" I mean, now that it's a different, now because it's not showing green, I'm not gonna face that same backlash or that same like audience. You know what I mean? Like, You gotta walk before you can run, guys. Currently, yes. I'm half tempted to sell them right now and fucking buy TRKA, though. FRC. As you notice, I've been MIA. You've been here a long time, helpful, but come on, man. Don't have to talk to Buzz like that. He works hard. His channel is helpful for us. Thank you very much for standing up for me. It doesn't hurt that I'm right, also, though. TRKA, it's probably going to go with Bitcoin. It might grind over to this trend line, though, as well. to all the haters. Yo, if you're going to quote the outsiders, at least quote them right. It's stay gold. Or was it stay golden, Pony Boy? Not just stay Pony Boy. Heads up on FRC. I'm so tempted to take profits on Mullen right now and put them on TRKA. I just don't want to put on like most of my eggs in a basket. Okay. We'll see what happens. Okay. We'll see what happens. DXY down to 101.40. I'll take that. Ape 155 chilling. I missed a really, really good trade yesterday with Hub C. It's alright. GNS is up 26%. Love it. That chart is just too slow to watch, to be quite honest. Trying out the 48 here for Mullen to a trajectory line. TRKA is getting awful close to my line. TRKA off exchange climbing dramatically as volume grew right around noon. 83.2% off exchange for TRKA. Holy shit. %90 off exchange in 5 minutes. Jesus. Yeah, I could see that. Hopefully TRKA doesn't move right here. I might do something. I'm out of Mullen. I just bought more TRKA. I just put all my Mullen in TRKA. Now I'm really heavy on TRKA. FRCB, I think, could be... It's just high risk, high reward. But remember, it's OTC, so... you've sent me Robinhood screenshots in the past. So I don't think that you're going to be able to trade OTC. I'm putting my guess on this being a double top, and the news on Mullen. I mean, well, Mullen reacting how it usually does off news. That's how I'm kind of guessing. That, and then the fact that this was in a 1,000th of a penny spread on a support line. That's why I did what I did. Oh, you still have it? Oh, okay. Word. I mean, I'm still in your same boat. I didn't do anything with it. I'm chilling. What that? I wonder what I got my average to right there. Oof. Bitcoin. Trying to move up. EMAs are in line. RSI is at 54. Mullen, I don't really care if we stare at the fucking screen anymore. Or GNS. Yeah, same. Fucking Hub C's up 20% now. Fuck. Oh well. What am I gonna do? What the future, since it's OTC, I don't really understand OTC stock. You have your position on Webull, right? Or on Robinhood, correct? Okay, then chances are it's going to be a position close only. So you just sell it whenever you think that it got up to its apex, basically. That's what it comes down to. Short, sweet, to the point. Bitcoin. Still underneath VWAP. And we have Powell in about 100 minutes. GNS has already done 4.4, or excuse me, about 4.3 million in volume. TRKA has done 8.2 mil in volume. FRCB has done 132 in volume. He should be able to position close only, though, right? Bitcoin trying towards VWAP. Like, I would just imagine that being, like, borderline criminal, like, if they couldn't close their positions. At the very least. Bitcoin trying to review up. RSI is a 72, though. Mullen stock split? No way. Because I just sold it. I literally just told you guys that. Did they really? Tell me I timed that perfectly. Fuck yes! Ah! That's how it's done. That's how it's done. Sorry, guys. Sorry for those of you that didn't just execute that, but... Boom! Look at that fucking timing. Oh, I'm jacked up now. I'm jacked to the tits. Oh, man. Hub C pisses me off. Yeah, I know. I sold it just before it was announced, Mom. I'll be honest, that was luck. Like there really wasn't any skill involved there. That was just weighing my options and seeing the risk reward change. And that's why I hate Mullen. They aren't getting my money now. Financial advice. Yeah, I don't think I'm gonna fuck with Mullen anymore. There's some straight up grind boss over there. FRC. What are you doing at underneath the 48? Got the sell at 8.3. There you go. Well, what did I... Exactly, it happens every single time. That's why I was trying to, you know, state how it was dangerous to be in it with all the news releases. Mullen typically does not do good when news drops on it. Like, that's... established at this point. This is gonna come touch you off, I bet. Ooh. FRC, you're gonna hold you up or no? She's going to, and then she's gonna do something with it. 1 to 25 for Mullen won't be. Is that what they're doing? A 1 to 25? FFIE at 10. Oh, Labu up to 11.8. GNRC is 17% up. GNS is up 25, by the way. Bitcoin to a resistance line. Ape to 155, chilling. What a fucking sell that was. Fuck yes. Under 18 on VIX. Bitcoin is above. What's it called? Above this resistance. Trying. RSI is 70. Go ahead, get up there. GNS, go ahead. Again, not financial advice. Yeah. Ape to 156. I'm feeling like there's gonna be news or something at the end of the day. I don't know why. I'm just feeling news. On what? I don't know.
So the French Constitutional Council rejects the retirement age referendum in France.
Everything that touches Coinbase sinks. 94% of Coinbase holders are in the red. I mean, not if you bought it if you're in the mafia. Just saying. We were so early on that. So I guess that puts the mafia at top 6%, huh? Something like that. Uh, 9 million in volume on TRKA. 4.5 million, up 24% on GNS. 136 million in volume. Volume cooled off as this started to come down, by the way. But 136 million traded on FRCB at the moment. Wonder if someone will catch the Mullen knife. If I had a scratch in the middle of my back and you saw that I had a pretty short arms and only had like 2. What? I don't get it. Mom, what are you saying on what to? $13th review up on a Bitcoin? Julie, you're not going to talk about that on my YouTube channel. Oh, you can bet someone will buy that falling knife. Someone always does. Yeah. Yeah, wrong platform. May 15th, I believe. %40 cost to borrow. I mean, not really though, because like it's not like you have like a profile picture and you're like gorgeous or something. Like other people think that you're probably a guy. Just saying. You might want to look somewhere else. Good feeling. Oh, I have a good feeling about what's it called, about GNS and TRKA at the moment. I also have a feeling that FRC is gonna like destroy things in a second, but the entry on that was earlier at 30 cents when I drew that risk reward. Oh, don't get him fired up. God, that man. For all of you guys that are feeling that Mullen pain, I'm sorry, but I'm so happy that I timed that the way that I did. FRCB is the OTC version of FRC. And it was sniped down here at 30 cents. How about I don't trust the CEO or the leadership, so I'm just going to stay clear at the moment. I'm going to wait until it sells off a shit ton, and then maybe I'd play a scalp. I did just buy TRKA, though. I will say that. I want more TRKA. Mullen going to end up with a 10 billion float. Well, no, because then they're gonna what's it called? They're gonna end up doing a reverse split again, probably. Heads up on FRC, guys. To the upside. I feel good. I do what I want. Down to support resistance. Poggers or peggers, we must know. Sorry, too far. Yeah, probably. Probably just a little bit too far. Seco lunch. I had a day yesterday. Mullen's going up. Really? I mean, I'm happy I sold where I did because of the percentage change. I mean, that could be close. I mean, yeah, that could be the bottom, for all I know. Boil volume dried up. FRC.
So as a reminder, we're under an hour away now to the top of the hour. We do get the FOMC rate decision and rate statement, the headline event for the day. So again, just to make our users aware, our very own Tony is currently doing a live stream on YouTube, the link to which is on the feed, where he is going over some of the fundamental prep ahead of this release. So that link there again is on the feed. We've also posted out a prep document which has some views from some of the larger investment banks in the US, what they expect from this meeting and the coming meetings. So that's also available on the feed for anybody interested. We'll be going over this in about 50 minutes time.
So you think HKD is gonna pop then? September 23rd, really gonna be the verdict on the Torres verdict. Well, there's actually what's it called? There's well, first of all, I don't know the answer to your question. Second of all, there is a what's it called? There's like a big event on May 30th and then June 1st as well. So we have that prior to September 30 or September 23rd. Okay, I do. They're hammering to get them cheap. I don't know, to see manipulation with purpose. I mean, there's definitely manipulation. It's not. That's not really a surprise. We gotta go on a Mullen slide or what? Literally tiptoeing the 52-week low. Yeah. Guys, remember, I am going to be hosting a space tonight with GNS at 6 o'clock Eastern. Just in case any of you guys are interested, my Twitter handle is just @BuzzMarginCall. Bitcoin's RSI is at 47. Key level. Can you make sense of this? TD showing no available yet. Ortex. There's no T at the end of Ortex, just so you know. Ortex providing cost borrow data. Maybe I'm confusing myself. Yeah, so different institutions will have different rates. They're not all the same. They're not all identical. And different institutions will also have different numbers of shares that they could, lend out. Also, keep in mind the Fintel numbers are only the numbers from interactive brokers, does not include other brokerages' short data. I just want this damn lotto play to work out. GNS cooled off in volume. FRC cooled off. Everything just kind of cooled off in volume. I bet it's because of the just waiting on Powell. FRC 13 coming to the 24. GNS sliding with the drawing towards VWAP, where the 200 is trying to cross VWAP. Dogs, chill out, please.
So we're now shortly expecting the results from the Fed reverse repo facility.
Shh. My bad, guys. Look at that 13. She's coming up on that 48 pretty quick. Top up 58%, and HKD is a Chinese girl in the corner. Jesus. All right. FRCB. What are you doing? Pay attention to volume here.
102 counterparties take 2.258 trillion at the Fed reverse repo operation.
$2.28 trillion. Sandy. All right. Is that text to speech or just your intercom? Wait, which part? I don't even know. Let me just go pull that amount from under the mattress. Oh yeah. Mullen offering, Isaac's trades going off on it. What the fuck is Isaac's trades? And why would any of us care? That's what I'm saying, like, I don't know. I mean, what did like, at the top of me streaming, I literally said that with all of the good news that Mullen was putting out, typically that means that there's going to be a sell-off or something. And bang. Like, it is what it is. TRKA doesn't... I don't like to put timelines on things, but I get it. Hopefully we can hold view up here on GNS. Hold on a second. Bitcoin on a super trend. RSI is 62. Isaac sounds like an Apple version of Rabbit. I just don't know why I would care about somebody else having an argument with somebody. So. Launch. GNS. Key level. Hopefully it could swing. I think that we're going to get news after the bell. This is like a big pennant, actually, on Bitcoin. If I were to draw it. I'm not going to have enough time before it pops. I don't think. Maybe I will. I love how spooky the market is. Pre-Powell speeches better than most suspense movies stick out now. I'm certainly intrigued. What is the news? It's flying. Okay. TRKA is at VWAP. Bitcoin. Heads up on FRC, guys. It's dangerous, but she can hit. $13.48 on FRC. Just under 140 million in volume on FRC right now. What are you doing? FRC just looks jumpy. Congrats to anyone winning on BuzzFeed. Yeah, for real. UGNS. A little bit of pop. FRC. I'm liking the look of this, especially with Bitcoin moving the way that it is. Alright, what was the news on BuzzFeed? Does anybody know what the news was on BuzzFeed? Because it's not reporting. An agreement with TikTok? Interesting. TikTok announced it in their earnings report from what I saw posted. Okay. FRC? What was that? Go ahead, Bitcoin. EV go up 7%. IDEX up 15%. FFIE up 11%. Labu is now up 13.5%. 14 on GNRC. HubC 17.5%. 29 on GCTK. And on GNS we are at 112. 20% up. We're most likely going to trade sideways for like the next half hour. Just saying. Although, if they surprise us with like the rate hike number, and that leaks, then I totally take that back. Because we've had numbers leak before, if I'm not mistaken. It's like a couple months ago. Backed up 4.5. Yeah, we're gonna chill on volume. You'll see the false move about 3 minutes before Powell's speech starts, and then it'll quickly turn the other way. Yeah, you're right. You're 100% right about that. It has been a trend. It's like the first move is a fake out, usually. Except for like 3 meetings ago, the first move was actually like the real move. You don't think Powell pivots? I think that he would shell shock the economy if he did pivot. They probably do have those. I mean, like, you could gamble on anything these days. IDEX up 14. SMX up almost 11. GSAT up 8. Bitcoin trying trend. BuzzFeed's trying up as well. GNS is 20%. Oh, wait, you actually do? 142 million in volume on FRCB at the moment. The market would be that app. I doubt drafting. I'm not all that positive. I don't want to give you false info. Still about 14% on Labu. Up C well off the highs, down to 70 cents. Bitcoin RSI is a 63.3. FRC failed right there. I tried to go for it. Guys, FRC might just go straight up like SIVBQ style. Just saying. No luck on the search. Whatever. Borgata has one. Bitcoin up.
So again, you can trade the FOMC rate decision with us live. Our very own Tony is currently live on YouTube. He's gone over some fundamental prep. You can still watch back on that. But he'll also be covering the data release and the market reaction to it. So again, the video for this is available on the feed.
I'm going to mute this guy.
We are just under 20 minutes away now to the top of the hour where we do get this US interest rate decision. Just going to take a quick look at some notes from analysts here. So BlackRock, they do note that income is back as a portfolio driver, and they see interest rates staying high in the new regime of macro and market volatility. So BlackRock says that in the US, it's now evident in the financial cracks emerging from higher interest rates on top of rate-sensitive sectors. So BlackRock don't see major central banks coming to the rescue of the economy with rate cuts this year, and they see the Federal Reserve and ECB hiking rates again this week. Of course, we did see the ECB do that already. As growth takes a hit. So they do also comment on the US 2-year Treasury yield, which is back near 4%, even as the market eyes a Fed rate hike this week. And the US PCE data they cite as well, which showed consumer spending losing momentum over the course of the first quarter, and strong US wage growth, pointing to inflation settling well above 2% policy target, which is why BlackRock believe hopes for rate cuts this year are misplaced.
FRC. FRC is gaining ground, guys. Boyle's got some pep in its step. Okay. Hello, Boyle. Yes, sir, it did. Oh, we should stop using that word. Go ahead, FRC, please. Go ahead. Lead the way. No, I actually sold Mullen right before the announcement, luckily, and I actually told you guys like when I was doing it too. Ooh, CXAI down 12.6. Oh, that one I forgot about. Like that one I'm forgetting about. Like I'm talking about the one that I'm actually like actively trading. That one's probably into like oblivion. $1.3 up on AI. Wow, Sizo all of a sudden is up 18%. Whew. Ugly little pop. No news. So. GNS is on a double bottom. Just underneath support. Wouldn't it be awesome if FRCB made compliance over the next 10 days? Wouldn't that be something? Oh, wait. I don't think that's how that works, though. I think that they'd have to relist to qualify. Or apply for, like, a fresh listing. Right? I knew that you guys were gonna, that somebody was gonna say backed with it being up 5.8. I knew somebody was gonna hop in chat. I'm going a little. Last question. Does anyone else see a problem with having only digital currencies that the government can pull away at any moment? I'm becoming far more wary of everything digital monetary wise. I do see that as an issue. $25.
We are now 10 minutes away from the top of the hour and the release of the headline event for the day and the week, the US interest rate decision. Median forecast is a 25 basis point hike to 5.25% from the prior 5%. So taking a look at a note from ING ahead of this release, they say that inflation remains unacceptably high, but banking stresses are leading to a tightening of lending conditions, which will do more to slow the economy than the likely 25 basis point hike today. So while the Fed will leave the door ajar for further hikes, the need for a higher policy rate is highly questionable, according to ING. So ING themselves expect 100 basis points of cuts before the year end and do think that this will mark the end of the Fed's tightening cycle today. But the central bank will be reluctant to explicitly state that, ING thinks. So last month it did switch its
Devil, I
language from
agree.
February's ongoing increases in the target range will be appropriate to quote-unquote some additional policy firming may be appropriate. So inflation has continued to run hot and the jobs market is tight while the first quarter GDP was headlined by stronger consumer spending. So ING adds that Federal Reserve officials' comments have
25 here is
changed
fine.
over the past month, other than hints that the impact of credit conditions is being more readily acknowledged, with some officials, including the likes of Atlanta Fed President Bostic, openly talking about one more hike and then a pause.
Maybe one day.
And so ING gives some forward guidance as well, as they strongly suspect that the 14th of June FOMC meeting, the Fed will adopt a hard stop as it did in January of 2019,
Sure.
when it paused and talked of quote-unquote patience after just the previous month's warning to the markets to expect some further gradual increases.
I'm not gonna.
ING think this
I'm
is
not gonna
because
time it, but
recessionary
I'll do my
forces are
best.
building rapidly,
3 minutes.
which will lead to rising unemployment and inflation falling quickly enough through late 2023 into next year as well.
GNS. I hope you lift. Don't want to slide. Kappa Pat. You've already had me explain it like 5 times, so like I'm gonna be very, very like I don't know, to the point about the statement that I'm gonna make, or that I would make. That's the best I could do for you. If you wanted me to do better, then like I don't know. I just shouldn't have been able to practice 5 times. Okay. Message me on Twitter. Message me on Twitter. I kind of want to like see if you're a real person or a bot. Because it's kind of hard to tell. I don't understand what they are going with the reverse split if they had extra days to try and get above $1. Alright, how would I be a bot though? You'd be surprised. Because David Mishery's a scumbag? I think that's the best I got for you. Exactly, Doc. Exactly. Ooh, GNS hard down. Hopefully we don't lose a buck. Remember, guys, the speech isn't until 2:30. The minutes come out at 2. So we'll see a reaction in the markets, and then we'll see another reaction there afterwards. I guess I'm kind of wondering how she's going to play out tomorrow. She might move, to be quite because they hired that lawyer, but like for right this second, like I'm just happy I was able to get out before it dropped. However, like I don't know how long I want to stay out of it. I don't know. Maybe I'll just stop giving Mullen my money. What's up, Mark? Watch this go insane when Powell comes on. Or maybe even at 2 when the statement's dropped. Spider 300, oh boy. 390s for sure, in my opinion. Watch out on FRC. This was a snipe at 30 cents. Let's see how rough this is going to be.
One minute remaining now.
Well, he always does. That's why I prepared for a sell-off. I actually sold it like within seconds of, what's it called? Seconds of the announcement, which was lucky. By the way, everyone, please slap the like and share if you can. I appreciate that. What do we got? What do we got? 5 seconds.
10 seconds.
Oh.
Hike 25 basis points, hike 25 basis point, hike to 5.25% as expected. So the Fed drops the language that it anticipates more policy firming may be appropriate to attain a sufficiently restrictive stance. The Fed drops that language in the rate. So the Fed opens the door to a rate hike pause. So again, Fed opens the door to a rate hike pause. So the Fed says that in determining the extent to which additional policy firming may be appropriate, it will take into account the tightening to date, policy lags, and other developments. Repeats that the US banking system is sound and resilient. So it says in determining the extent to which additional policy firming is appropriate, again, is taking into account the tightening to date and other developments. The Fed says tighter credit conditions are likely to weigh on the economy, hiring and inflation. Says that job gains have been robust, inflation remains elevated. Fed adds that it will continue reducing its balance sheet as planned, and the Fed adds that the vote in favor of the policy change today was unanimous. As I look into the markets here, I did see some weakness in the US dollar, a little bit of whipsawing happening now in the S&P 500 and gold as well, seeing a similar reaction. So again, just to repeat some of the key notes from the Fed statement here, is the Fed did open the door to a rate hike pause here, as they dropped the language that it anticipates more policy firming may be appropriate in order to attain sufficiently restrictive stance. So noting now as well, the US Treasury 2 to 10-year curve moderately lessens inversion, last at around 53.9 basis points after the Fed raises rates there by 25 basis points as expected broadly.
Bitcoin super trend up. It's at 13 curling towards the 48. Not quite there yet though. Yeah. And that right there is what I mean about talking about it and not being about it.
We have posted out the FOMC rate statements on the feed for those interested.
Yep. Talk about it, not be about it. Look at FRC. Monster. Monster.
So from FedWatch here, US interest rate futures price in a pause in June and July meetings now. So according to FedWatch, in line with the Fed statement here, US interest rate futures are now pricing in a pause in the June and July meetings.
In that account that I don't look at. The one with the ridiculously high average. Oh, FRC. FRC. Please don't call me hun.
So from FedWatch here, US rate futures now show that traders are pricing in cuts in September after the Fed decision.
What do I think will happen with I don't want to speculate on that. No, thank you. Nope. DXY dying, nice. How's my FRC chart different than the one on Webull? Oh, that's because it's OTC. Oh. You're talking about that. Okay. Webull is slow when it comes to OTC a little bit. You gotta change your chart from combined, Jordan. It's factoring in FRC prices from earlier. Yeah.
So Fed swaps also, they are still maintaining the amount of easing seen by the year end.
Mullen dropped 20. At some point, that's going to become a buy again. I just don't know where. And I don't want to be the one catching the falling knife. Bitcoin and SPY both try to move up. Maybe this is the real move, not the head fake. Mullen flow will go from... Yeah, what's the new float at Mullen going to look like? I agree.
Wall Street Journal's Tim Morales via Twitter says that the FOMC statement used language broadly similar to how officials concluded their interest rate increases in 2006, with no explicit promises of a pause by retaining a bias to tighten.
TRKA is doing that thing where it trades in between a thousandth of a penny. FRC's RSI is a 70. It's at the 200. Same language as 2016. Yeah. Mullen will go from $3.62 billion float, excuse me, to a 144 million point 0.8. That sounds like a lot more feasible. Shining bright, more flatness ahead. Wait till Powell speaks at 2:30. That's what we're really waiting to see. Hold on a second, let me get this up and live. Not cool. I have it up and live. No lie, I'm jacked to the tits. Third. This is not a test. Alright, 1 second. Let me take the dogs out real quick and cycle them before Powell comes on. Alright. Let the dogs out. TRKA down to 19 flat. Bitcoin trying with all the EMAs collapsed on it. Spy underneath VWAP. Atta boy. Yeah, for real. If you guys could stop spamming chat, that'd be great. Unless there's a valid reason. AI up 2.3. SPY trying up. I don't really trust any of these candles, realistically, until Powell comes on. For the most part. Can you chill out, dude? Please? Okay, that's cool. Can you just tone it down a little bit? $13 to the 200 right there on FRC. No, because somebody I know that's actually legit that's like sent me supers before also did really good on PP coin. So he's not wrong. He's not lying. During the most recent debt ceiling debates, does the Fed want extra heavy with the QE? Can they do this? I don't know. Look at FRC. What a layup. Go ahead. FRC could go straight up like SIVBQ. Just so everybody is like on the same page. Like this should not have been this cheap at open. It should not have made it down to 30 cents. That was an error. That was an error by somebody. You think SPY's gonna get whipped? SPY new high of the day. FRC. Volume is falling as price is rising. Oh, fuck. I have 409 puts expire today. Oh, man. I wonder if somebody's gonna leak the minutes. Or leak the statement. You better rub Daddy Powell's feet for the hammer he's gonna drop. Jesus Christ. One second. All right. This is gonna be a shit show. Unless it's a fake out, Doc. You were just the one saying about, you know, like a couple minutes beforehand, you know, there being fake outs. $413.75 and we're good to blast. Okay. I wouldn't have puts right now personally, but I don't know. Never played them. Yeah. I second that. I actually posted it on Twitter, like, what, 2 days ago? Verbatim. Go lay down, Bubba. Go lay down. Don't sleep on IDEX. What is IDEX doing? Yeah, IDEX up 14. Yeah. There was a reason why I liked them. They had pretty good technology from, like, what I was able to gather. Just watch out, because I believe that they have a, what the fuck is it? A deficiency. CXAI down 14.5%. FHN, my regional bank, has a 1 minute RSI of 9. A 9. It should be fun. That's 26, not much better. Volume on TRKA currently about 11 million. FRCB volume to 157. I doubt that this TRKA handle or candle, excuse me, will hold, but we'll see. The market just goes mute like right before he comes on. All right, last minute before the mayhem. It might be bullish that they said that they might, or that they're going to stop with rate hikes. I guess we're yet to find out, though, right? Like, that could be Bitcoin headed down towards the 200 just for some support. Waiting on him to take the stage. All right, let's get it, guys. Good luck to all.
Good afternoon. Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses
This
to
is
both
the
sides
fake
of
out,
our
I think.
mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point.
No, I think this is the fake out.
Bringing the target range to 5 to 5.25%.
I guess we'll see,
And we're
right?
continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity.
Well, Jarrett's not double
inflation.
bottom off that nonsense.
And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
We're already in one.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. that sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is, so let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Rachel. Thank you, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Oh, thank you. Yeah, Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures
Good point.
to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about, the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't, it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves or many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately, it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned, I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank and there are many other banks that are experiencing these things, and we're on the case.
Go ahead, Victoria.
Hi, Chair Powell. I wanted to ask you, obviously with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
Oh.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large size banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law as it goes to the least cost bid.
Thank you. Colby Smith with the Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. You know, when we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And, you know, when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and you know, we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, you know, a sufficiently restrictive stance. But I think conceptually, though, we think that, you know, interest rates, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way: the assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it.
You think, Doc?
And, that's really all we can do. As I say, it does complicate. We have, you know, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and you know we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now, but nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's, you know, we're just going to have to, before we really declare that, I think we're going to have to see data accumulating and you know, make that, as I mentioned, it's an ongoing assessment.
I want to follow up on credit, if I could. Could you give us a sense of what the SLUICE survey indicated? It was already, you know, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLUICE on May 8th, in line with our usual time frame. And I would just say that the SLUICE is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Nick.
Nick Timmerouse with the Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last two meetings, been seeing the effects of those moves. Why did the committee feel it was necessary to keep moving?
Well, The reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period.
Key levels on
level of-
SPY and
of
Bitcoin.
A policy stance that's sufficiently restrictive to bring inflation down to 2% over time, and that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us
17%
to
on
see more
Labu.
data, and it will continue to do so. So we really, we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't with economic data. You can't. You've seen take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that. That a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
Would be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're going to need to stay at this for a while.
How does the other side of the mandate, the job side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Hi, Chair Powell. Matthew Bosa with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the summary of economic projections and all that. I don't think you can
Keyword so far?
deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand really in the labor market. It's interesting as we raise rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet, wages have been moving down. Wage increases have been moving down. And that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession.
We've been in a recession.
It's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal, and then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So, speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So to get, I think as goods pipelines have gotten, back to normal so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, and it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward is going to be what's happening with credit tightening.
How banks?
Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And so we can begin to assess how that fits in with monetary policy. That'll be an important thing. We'll be looking at everything. I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet, and now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so
good question.
We on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation.
It's going to go for it back up. It's just eating supply.
The history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services. It really hasn't moved much, and it's quite stable. And so we think demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney?
Courtney Brown from Axios. I'm curious how you view the role of the overnight reverse repo facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing. We don't think now. It hasn't actually been growing. It moved up, it moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now. What happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan Banks and things like that. Over the course of of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on over the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah Ewell-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's. I don't really think we shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just shouldn't be a thing. And again, I would just say no one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Scott.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the supervisory lapses at Silicon Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view, and what would it take to get the stronger oversight that you and he said in your release would be necessary?
So I didn't take part in creating the report or doing the work, but I have read it, of course, and I find it persuasive. I mean, I would say it this way. A large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system. I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that may just have been technology evolving. You know, we have to keep up with all that, but some of it may be our policies and supervisory and regulatory, whatever. Well, what our job is now is to identify those things and implement them, and that's kind of the only thing I care about is. And I feel like I am accountable for doing everything I can to make sure that happens.
Key level on Bitcoin.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
So,
yeah, you hit on your point.
I guess I would say it this way. There were three large banks, really, from the very beginning, that were at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved, and all the depositors have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, with what you saw in the beige book, and you will see in the sluice is small and
I'm
medium.
feeling a
medium-sized,
reversal after he stops talking.
Medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Greg?
Thank you, Fed Chairman. Greg Robb from Market Watch.
I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed chairman. I think I've heard you say a couple of times that you deferred to the vice chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations. And I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the vice chair for supervision, you know, the place to start is the statutory role, which is quite unusual. The vice chair, it says, shall develop policy recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as vice chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that person to have political accountability for developing that agenda. So the way it works,
after
the way
it sells off,
in practice for me is
maybe
I've had a good working relationship. I give my counsel, my input privately, and that's, I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires, and you know, but it isn't. I wouldn't say it's a matter of complete. More, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on.
What the fuck? Okay. There we go.
I just wondered if you had any regrets, or was there anything that, you know, decisions that maybe you regret now in light of...
I got lucky, Peru. I got out of it right before it dropped.
Sure. I mean, you know, who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my great mentors used to always say, control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered? I'm curious if you can give us any color as to whether there were any initial concerns about raising rates again, or what those discussions entailed.
So support for the 25 basis point rate increase was very strong across the board. I would say there are a number of people, and you'll see this in the minutes. I don't want to try to do the head count in real time, but people did talk about pausing, but not so much at this meeting. There's a sense that we're much closer to the end of this than to the beginning. That, as I mentioned, if you add up all the tightening that's going on through various channels, we feel like we're getting close, or maybe even there. But that's going to be an ongoing assessment, and we're going to be looking at those factors that we listed in to determine whether there's more to do.
I'm curious too how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say. I just think I think we've moved a long way fairly quickly, and I think we can afford to look at the data and make a careful assessment.
And we'll go to Nancy for the last question. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
Well, I just would start with
Good question.
Something that's changed, really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history. And that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that, that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that. Then we're going to revisit. It's pretty clear to me anyway. It's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have specific concentrations in certain parts of the economy?
Yeah, that's what Vice Chair Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.
All right, guys, what do we think? What do we think? I think that this is a fake out, and I think that the market's about to spin. You got an SMTG? Nice. Why is my shit not working for me? SNTG. Please and thank you. I'm not even gonna fucking bother if it's an issue. I think the banking sector is still weak, and we'll see more and more. Yeah, that actually sounds pretty fucking accurate, Doc. Where's the twist here? But I've been wrong before, yeah. I feel that. Fucking TRKA, ouch. Should've waited till there to grab a fill. 1 second, let me let Lucky in. Ooh, are we getting a reversal like I thought? Or no? VIX to an 1820. Bitcoin trying up towards the 48. Watch how the IDEX doesn't move off this. It's like kind of consolidated at a low, like a little double bottom. $101.38 on DXY. MMT down 2.5%. CXAI is now down 20%. Heads up on Mullen. Mullen's above the 48. Whoa. Really tight on GNS. Just moving sideways. FFIE. EVGO almost back to 6. TRKA is killing me right now. $48.5 on Coinbase. SINT to 148. Octo down to 227 after the rip yesterday. MCOM is in Pennyland at 90 cents. Why is SPY still headed down? Oof. At a potential double, though. Bitcoin, solid push up towards 48. Q's at support resistance as well. Hard down on GMS to 109. Ape lunch. Oh. Chilling at 153. BRIG 570. QUBT is all the way down to 112. That's about lunch. Congrats if you grabbed Hub C on that low that we were talking about. Damn right. Oh, that's fucked up. No, that's fucked up, dude. I'm sorry to hear that. Yeah, I do too, Peru. I want to see if it sells off, and if it sells off, then I'll probably buy some. I sold it right before the what's it called? I sold it right before the announcement of the split, luckily. And then I'm wondering if it's gonna sell off again with like after it's already like gone through like the reverse split. However, with that one filing where it says that they've obtained counsel that works with Share Intel, that tells me that they're going to be counting these shares, if that makes sense, and making sure that it's accurately distributed. GNS on a slide. Pissed. I don't blame you. I'd be pissed too. Guys, remember that at 6 o'clock, I'm going to be hosting a space with GNS. My Twitter handle is @BuzzMarginCall. TRKA trying to super to the 48. We'll see. Then Yahoo Finance Mullen. Yeah. No, it is true. Whoop, FRC just dropped to the support level. I just bought more in TRKA. Nice. Yeah, if TRKA like doesn't perform, I'm kind of fucked. Just saying. Like I'm gonna be kind of screwed. Ooh, FRC down again. Man, you definitely would not have done well in the MMTLP trade. Like, you would not have done well. You'd be losing your fucking mind. That was not a mistake at all. It was a mistake by the regulators. Wait, I mean, oh, sorry. I just wanted to take a picture of that for later. Cool, calm, collected. Grandma, you finally got hit. You're still up on your call out though. Bitcoin to the 48. I'm chilling. Fingers crossed that the market doesn't gap down in the morning. Don't want the option IV juiced. Word. GNS trying back heavy WAP. Fix 1864. Bitcoin trying up. Okay, but what about in between the period? What about in between the period after I posted the video? Is there a rise in the stock? Also, it's kind of creepy that you're messaging my girlfriend on Twitter. It's all right. Like it's almost like you'll discredit the fact that something ran like, I don't know, let's say like 40% right after I post a video or something, and then after that, yeah, the price goes down and it you know it falls, but you're gonna judge me on it falling, not the play itself. That I mean, it just seems kind of like ludicrous. Who deleted what post? Maybe it had one of those words in it that you're not allowed to have. After what fell 89%? If you're talking about FRC, if you're talking about FRC, the buy was at 30 cents down here where we were talking about sniping right here. Look at this. Look at this. Hold on, you ready? Look at these. Bang, 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 bang. And then all of a sudden, rip. Funny how that works, right? Like, go ahead and talk your smack. That's fine. I don't really care. Just like, know what the fuck you're talking about. Okay, my original average is 187. And then if I DCA'd at 30 cents, like, how are you not understanding? I mean, yeah, like, I might be a little bit red right now, but at the same time, like, if this does move, I'm doing pretty damn good. I don't know, man. It just seems like you kind of like, I don't know. Maybe you like it in the back door or something, and I'm just not that. I'm not that tight. I just want to be left alone. Always at the end of the market? Yeah, well, that's probably when he gets off work. It's the same person. And if you look at their, what's it called? If you look at his profile, he created his profile, like, in May of 2023. Hmm. Why are you, like, so hung up on being in my live stream? Like, nobody likes you here. Is this like the only attention that you get? He made the account yesterday? Yeah. I know. It's okay. It's just like a constant harassment, and it just like, I don't know. Almost like I should care, but I don't. Okay. Okay. About 8 minutes left if you're dealing with PDT. Like, did you know that if you fixed your spelling and grammar, we would have no idea who the hell you were? But like, apparently that's too hard. Oh my god, you're not calculating the runs that they've done before the reverse splits or Jesus. Alright, bye. I can't. I'm not. I'm not doing that. Yours Mullen hasn't gone down further. All reverse splits don't have to be bad. I just want to say that for the record. Reverse splits don't have to be a bad thing. Throw that out there. It's just related to market cap. Now people have been taking them as bearish, but they don't have to be bearish. That's what I'm thinking, IT. I just feel like they might move down a little bit more at this point. But at the same time, with that news of the share intel stuff, right? Them doing a reverse split makes complete sense. Complete sense. One second, guys. One sec. No, it's not. Anthony says better grammar. Yo, IT. Yeah, thanks, brother. I appreciate that. I appreciate you. Interesting wick there on TRKA. And Voss at 7 up. I have an idea of who it is, but I just don't need a defamation case, so it is what it is. It's up on Mullen, actually. It could do things. Could do some very interesting things. Mullen looks like it wants to lift. I'm gonna worry about TRKA and with the day it's having, unless they're pushing it down for news release. That's what I'm kind of hoping. Are we forgetting that Mullen just authorized 1.2 billion shares and then ARA? Yeah. No, I actually, I was lucky enough to sell right before the announcement of the reverse split. However, because they hired the council with share intel, that makes me feel like the reverse split might have some kind of effect. I did sell before this drop off though, so there's that. Oh, I didn't even realize it was close. Jeez. Okay, I need to... What's it called? I need to call and pay some bills real quick. IT. You're the man. Anyone see BBIG? What? Ooh, TRKA, what are you doing? Somebody mentioned it earlier. We were kind of... Heads up on Mullen. Like I said, guys. Like I said, watch out on Mullen. 1 billion volume? Really? Holy fuck. I didn't even realize. Alright, I'm gonna go on mute for a minute. I just had to pay some bills real quick. Alright, there we go. Sorry, I just had to pay bills. Bitcoin tryout? What else do I have to do? They were closed, so I can't pay that bill. I literally just paid this company. What is this about? Bitcoin trying towards 200. Fill that out. Okay. Whoa, Bitcoin up to VWAP. No, it was actually my gas bill. And my sanitary authority. Mullen doesn't move. Ooh, CXAI finished down 22%. Didn't even realize. Yeah, for real. Alright guys, I think I'm gonna bounce because I have to like kind of prep for the GNS space call tonight. It's at 6 o'clock. Please come hang out. Again, at Buzz Margin Call is my Twitter handle. But yeah, I will catch you guys at around 6. Later, fam.